Hello one and all. In this session, you're going to understand labor laws. What is labor laws? So labor laws are also known as employment laws, which are legal rules and regulations to govern the relationship between employer and employees. So why we have labor laws? So we have our labor laws mainly to protect the interest of both employer and employees and to promote the fair labor practices in the organizations and to ensure safe and healthy working condition in the organization and mainly to resolve the labor disputes. So we have the labor laws for these purposes. So the important aspect of labor laws are ESI, professional tax, and EPF. So ESI stands for Employee State Insurance. Whereas EPF stands for Employee Provident Fund. So and professional tax. So we'll see that this all aspects one by one. So we'll start with ESI. So what is ESI? So actually the ESI is Social Security Scheme offered by the Government of India as per the Employee State Insurance Act 1948. The main purpose of this particular ESI is to serve its employees when they get a challenges of health, like due to any sickness, any accidents, or at the time of maternity. And employees need to subscribe this particular services. So who subscribe these services? So for them it will be applicable. So where it is applicable? In general organization. So any organization or entity which having any 10 employees or more. In some particular states we have 10 as a limit. So if the organization having the employees 10 and above, so they should register under ESI. And in some states we have 20 as well. So any entity or organization, the number of employees are 10 or 20 based on the state specific, the companies have to register under ESI. And employees will need to subscribe this particular subscription, they will get the ESI services. So for whom and all this particular ESI is applicable? So any employees or any particular laborers who having their salary, the gross salary up to 21,000. So for them ESI will be applicable. So above that it won't be applicable. So any particular professions, we can say the professions, the laborers, employees, or who doing trading as well, for them also it's applicable. So up to 21,000, so it will be applicable for them. So the gross salary crossing the 21,000, it won't be applicable. And here the employer contribution to this particular ESI scheme will be 3.25%, whereas the employee contribution for this will be 0.75% on the basic salary. On the gross salary. On the gross salary. So what is gross salary? The total earnings of employees we call as the gross salary. So after deducting all the deductions, we'll get the net salary. So this is about ESI. So we'll start about professional tax. The professional tax is levied by state government and it's the state specific rules and regulations will be implemented on this. So every state will be having different rules and regulations about the professional tax. So it's applicable in all the organizations, where even a single employee is working. So when the certain threshold limit is crossed on the particular salary, then the professional tax need to be deducted by the employer and need to deposit to the state government. So according to the Article 276 of the Constitution, it says that so all the organizations who are not deducting the professional tax from salaries, so they should not deduct more than 2,500. They should not deduct more than 2,500 per year. from any employees. So this is the rule the specific act says. And as per the amendment schedule, even the ever registered dealer who want to register under GST, they should pay 2,500 annually as a professional tax. Even the registered companies have to pay 2,500, and while deducting the professional tax from the employees, they should not exceed 2,500 per annum. Means every month how much they deduct, it should be, if we add together for the 12 months, it should be up to 2,500. It should not be more than that. So if you see the professional tax in Karnataka, as I said, it's a state specific. If you see in Karnataka, if the gross salary is up to 24,999, there won't be professional tax. Whereas from 25,000 and above, there will be professional tax of 200 per month. So if you see that 200 per month, so into 12 if you do, so you'll be getting 2,400. We can see which is we having here less than the 25,000. Sorry, 2,500s, right? Which is less than 2,500. So this is about the professional tax. So we'll start with EPF. As I told, it stands for Employee Provident Fund. It is one of the main scheme from the Employee Provident Fund and Miscellaneous Act. Yes, it is a main particular fund, or we can say scheme, under the Employee Provident Fund and Miscellaneous Act, which will be governed by the EPFO. So it will be governed by the EPFO, so Employee Provident Fund Organization. So what is EPFO? So like you came to know that EPF is one of the particular fund, or we can say scheme, under the Employees Provident Fund and Miscellaneous Act, and it will be governed by the EPFO, right? We came to know that. So what is EPFO if you go for? So if you go for EPFO, so as I told, it is the Employee Provident Fund Organization which will govern the EPF scheme. So here, so in every organization, so number of employees, if 20 are above, again this is the state specific, if the employees are 20 or above, so then this EPF will be applicable. And in some states, so in some particular in exemptions, even for less than 20 also it is applicable based on the particular limitations and exemptions. So any organization or entity having 20 employees, so they should register under this, and the employees will be getting this specific benefit. Whereas, so the employer and employee both will contribute 12% of the basic salary and dearness allowances. And at the time of retirement, the employee can get this complete amount, what 12% has been contributed from the employer and 12% contributed from the employee on basic and dearness allowances. The basic pay or basic salary and dearness allowances, it will be getting to the employee's hand along with interest of 8.5%. It is presently 8.15%. So with the interest of 18.15%, they can get it. So this is all about the labor laws and important aspects of labor laws. Thank you one and all. See you in next class.